Hi, good morning, everyone. Welcome to this TradeStation webinar. Today, we're going to talk about Fibonacci. So using Fibonacci retracements for trading. My name is Jesus Nava. For those that don't know me, I'm the Director of Client Training and Education for TradeStation Securities. And it's always great to be here and talk about TradeStation. Hopefully, you guys enjoyed the presentation today. We're going to highlight some of the technicalities of Fibonacci tools. A lot of times we hear about Fibonacci, we know who Fibonacci was, but when it comes to utilizing those tools on the TradeStation desktop, sometimes it becomes a little bit challenging. Before we get started, the usual disclosure, keep in mind that every symbol and idea that we talk about is for educational purposes only. These are not recommendations of TradeStation, and also active trading is not suitable for everyone. Past historical performance is no guarantee of future results. And if anybody needs additional information on these disclosures, just go to www.tradestation.com/important-information, and you'll find all the disclosure information there. All right, let's go ahead and get started. I wanted to provide everyone with a copy of this PowerPoint. Let me just repeat my post that I did earlier today. So that link that I'm sharing with everyone here in the chat will download a PDF with all the information that you're going to see right here on the screen. It's a lot of the definitions and things that go around Fibonacci, so that you have a full understanding of what it is and how you can implement it on the TradeStation platform. We are probably not going to talk about specific strategies. I believe there's a ton of information online regarding Fibonacci and how to best utilize it. People that are experts on the subject and have traded Fibonacci before, but we are going to look at Fibonacci in terms of the technical aspects and where it comes from and how you should read it. So let's go ahead and get started. First of all, defining or identifying who Fibonacci was. Fibonacci is the nickname of a person named Leonardo Pisano, who was an Italian mathematician born in 1175. So that's how old the Fibonacci numbers are. It explains the connection between the golden ratio to the number sequence that takes his name. Now, the golden ratio is a topic that is explained, and examples are abundant in terms of the golden ratio and how it connects with everything in humanity and also in nature and the whole world. So if you're interested, it's a topic that it's great to read on. But today we're just going to focus on the number sequence that he talks about. And the number sequence starts with the number 0, and it's a mathematical sequence, because what Fibonacci did is he took every integer, like the 0 and the 1, and he added them together to result in the next number in the sequence. If we add 0 plus 1, of course, you get 1. So the next number in the sequence would be 1. So then you take the last two numbers in that sequence, which would be 1 and 1. You add those together, and you get a 2. So 2 would be the next number in the sequence. And you repeat that over and over again. You take the last two, which in this case are the 1 and the 2. You add them together, and they result in 3, and 3 gets added to the sequence. Then you have a 3 and a 2 that gives you a 5. So if you take that and you do that for infinity or for eternity, then you get what's called the Fibonacci number sequence. Right here at the bottom of this PowerPoint slide, you have a sample of what it would be up to the number 233. But this goes on, and then you can decide all the different numbers that are part of the sequence. The Fibonacci tools that you utilize in TradeStation and that are available on different trading platforms out there is based on this number sequence, because it is said that these numbers or these levels play an important part of the human nature, an important part in trading decisions. So even though it's part of the nature and the world, it's also affected the way that people trade. So to take this a bit further, the number sequence, you got to do something else to it in order to reach these Fibonacci levels. So Fibonacci levels are derived from the Fibonacci number sequence. And what it does is going to divide any number by its preceding number, and you get what's called the golden ratio number, or a 1.618. Now, as you go further into the number sequence, the closer it gets to that golden ratio of 1.618. This goes into also many dimensional properties of humanity and nature. I've seen many examples that are mentioned on the web. This is not something that I came up with, but many things in nature that adhere to the dimensions of the 1.6. Like, for example, if you take the dimension from the shoulder to the tip of your finger and the distance from your shoulder to the elbow, that relationship, or the distance between those two segments of your arm, adhere to the golden ratio of 1.618. And examples are numerous. But if you take the number, every number in the number sequence, and you divide it into the previous one, you get exactly that same number. Other interesting Fibonacci levels are derived by dividing one number by the next number in the sequence, not only the previous one, but the next, yielding a 0.618 or a 61.8%. Also, dividing one number by the second number to its right results in 0.382 or 38.2. And dividing one number by the third number to its right results in 0.236 or 23.5%. Now, why are we doing all this math? Because that is exactly what determines the Fibonacci levels. These percentages that we're talking about here, the 61, the 38, and the 23, are exact percentages that are on the Fibonacci levels. And they don't change because they're mathematical. Of course, you can adjust them. You can add more labels. For example, you can see that there's no clear 50%, although many traders, when they see a 50% retracement, just the even round 50%, it's a significant level that many traders look at. And that would be something that many traders would want to add it to the Fibonacci levels as a level to watch. But if you just take the numbers in the Fibonacci number sequence and you do the mathematical operations, you'll get these percentages exactly. Now, I did have the number sequence right here, and I think I can open up my calculator and just do a few examples. So, for example, if I take the 233, I'm just going to use the numbers right here on the screen, and I divide that number into 144, you get a 1.618. That makes sense? Now, if I take the 144 and I divide it into the 89, you get 1.6179, which rounds up to 1.618. And the further into the number sequence you get, the closer it gets to 1.618. You start getting these off little things once you get into the lower numbers. But it's interesting that the further you're into the sequence, the closer they are to that 1.618 ratio, which is the golden ratio. If we were to do the division that we talked about, let's say they take the 89, and divide it by the 144, 0.618. That's a 61.8% Fibonacci level. If we take the 89, same 89 that we talked about first, and we divide it by the 233, it's 89 divided by 233 gives you the 38.1. So 0.3819 or 38%, 38.1%. So you see how it's just mathematical calculations that are carried on the Fibonacci calculations, and every single line that you see when you draw a Fibonacci, it's because of these levels. Now, some traders say that this is close to voodoo science if you are relying your trading decisions on Fibonacci numbers, because there's no basis, or at least there's no market analysis basis on these levels. But at the same time, these are levels that are being watched by many traders. And just for the fact that many traders are watching these levels is just enough reason for you to take a look at them. Because if you have a lot of traders watching and making trading decisions based on these levels, they are going to be impactful to whatever security you're watching. So something to always think about. But even if you don't believe on Fibonacci levels because they're just mathematical and there's nothing really that scientific about the markets. It's more like an art. But still, since many traders are following, just gives you that extra information that something it's deemed to happen at those levels. So let's talk about the Fibonacci tools at TradeStation. We have the Fibonacci price retracement lines, the Fibonacci price extension lines, very similar, but a variation to them. We're going to take a look at them. We have the Fibonacci price retracement calculator, the Fibonacci time extension lines. These are not price extension, but time extension. We have the Fibonacci speed resistance arcs, the Fibonacci speed resistance fans, and then we have the Fibonacci cycles. I think that's the very last one, the Fibonacci cycles. Let's talk about each one of them, see how we can draw them, and see if we see any interesting information on the charts. Let's start with the Fibonacci retracement lines. We have a little picture here on the left-hand side on how they look, and it uses horizontal lines to indicate areas of support and resistance. The levels are calculated using the high and low points of the chart. By the way, these high and low points of the chart, you decide what they are. And then the Fibonacci tool draws the Fibonacci levels within those levels. And they have to be significant lows and highs on the chart in order for the Fibonacci levels to make some sense. 7 horizontal lines are drawn at levels aligned with Fibonacci ratios: 0%, 23.6, 38.2, 50, 61.8, and 76.4. And then you have the 100% ratio. You can see that some of these numbers are not Fibonacci numbers. For example, the 50 does not belong here. The 100 doesn't belong here. The 0 doesn't belong. The 0 does because it's part of the sequence, but the 100 doesn't belong there. But still, the 50 and the 100 are round percentage numbers that, as a trader, they just make sense in your head. There's been a 50% retracement, a 100% retracement. Those are significant levels, and that's why they're part of this Fibonacci tool. After significant price movement, support and resistance levels are often at or near these levels. And yeah, sometimes they may be referred as voodoo science, but it's sometimes interesting how these levels do act as support and resistance levels. So let's go ahead and take a look at them and how you can draw it. Let me go back here to my TradeStation platform. I'm looking at, in this case, I'm looking at a futures. This is ESM 25. This is the this is the June S&P E-mini futures. And let's use it as a way to draw our Fibonacci. Actually, this hasn't retraced much from a lower high. This can be drawn in any possible way. I was going to draw it from here, this low, to this very high, a significant high and a significant low, but then it's very little retracements from that level. But if I take it maybe a prior significant move, let's say, for example, that we wanted to track from this high to this low, or even maybe further back, like this high to this low, we can see retracements in that manner. Let me go ahead and take a look at this big drop in price from, let's say, this is February of 2025. That was the last high of this period, all the way down to this low. Let me squeeze the chart a little bit so that I can take a look at or attach to those high and that low. And to be a little bit more precise, I'm not sure if you noticed what I did. I just clicked on the price scale here on the right-hand side just to squeeze the chart a little bit. I'm not sure if you knew that, but it gives you a little bit more of space here at the bottom and at the top if you wanted to draw something there. If you don't do that, let me just double click here on the price scale to reset. You reset by just coming down here, and there's a reset button here on the right-hand side. If I don't do that, take a look at the high of this candle and the low of this candle. They're right against the edge of the chart, and sometimes it makes it difficult to know if that's really the end, and it makes it difficult for you to draw some analysis that attach to those little ends. Let's go ahead and squeeze the chart a little bit. So I've squeezed my chart a little bit, and one more thing that I'm going to do, I'm going to go here to my drawing menu, and I'm going to turn on this feature that we call snap mode. Snap mode is interesting as well because it allows you to draw something on the chart and make it attach to one of the prices of the candle. When I say one of the prices, I'm referring to the open, high, low, or close. So depending on which one is closest to your click, that is where that drawing tool will be attached. So for matters of drawing Fibonacci lines, I like to use snap mode because I don't have to be precise or so precise in my clicking. I can just click on or within the vicinity of where that price is, and the tool will automatically snap to it or attach to it. Does that make sense? So snap mode on, and then I'm going to go back here to drawing and just use the Fibonacci price retracement lines. You're going to see that right here in the menu, the Fibonacci tools are sorted in alphabetical order, which is not the order I have them on my PDF. I just have them in the order that makes sense. You start with the retracement lines, which is the simplest one, and then you just go and start explaining the other one. So I'm just going to do price retracement lines. I have snap mode on, so I'm just going to go here within the vicinity of this high, click, and that attaches to that high very nicely. And then I'm going to come down here to this very bottom. Okay. And that's how you draw Fibonacci lines. You can see that the lines automatically show. They have a particular color and particular thickness. I'm not sure if I made any changes to the defaults, but if you wanted to make changes to the colors, a lot of people have complained that they're a little bit dark and they want to see the lines a little bit with a brighter color. The reason why they were designed this way is that they don't really interfere with the candlesticks, and you can see the brightness of the candle on top of these lines. But if you really want to change them, you can just double click anywhere on that Fibonacci, and it'll take you to this dialog formatting each one of those lines. So you have all these percentages. Let me move this over so we can talk about what you're looking at. Settings. So you have all these check boxes. The trend line is the dotted line that we drew from the high to the low. If you don't want to see that line, you can always disable it. That's what the check boxes here are for. So you can turn on or off any level that you don't use. So you have the color for the 0 and the 100. You have the Fibonacci levels right here. The 50 is not a Fibonacci, but it's here. It's available for you to monitor if you want to, so you can see how a 50% retracement looks like. But yeah, come here and explore. One more thing you can do here, and you can do on any Fibonacci tool, is turn on the alerts, which I find very useful because, yeah, maybe you're looking at intraday movements on a security. This is the daily chart, by the way. The time it takes for it to come to any of these levels, it's going to be longer than if you were looking at a 5-minute chart and looking at retracements on a 5-minute chart. The tool can be used on any time frame. Of course, if the retracement happens on a daily or a weekly chart, those retracements are more significant to the market than intraday retracements. But intraday retracements, of course, are useful. A lot of traders use them. So it's not only a tool that is for long-term traders or swing traders, it's a tool that even the day traders can use in their analysis. But one of the things that TradeStation allows you to do is turn on an alert on any of the Fibonacci levels. Why? Because you may have a dozen or 30, 50 different chart analysis window with different securities. Each one of them have the Fibonacci retracement lines, and you can be notified when any of these securities are touching any of these levels, which is very useful if you're following the Fibonacci as a way to monitor support resistance levels and where prices may bounce or go back to. Oh, by the way, labels are the values that you see here is showing the value and the price, and you can justify if you want to see them against the price here on the right. Things that you can modify for the Fibonacci and make it look and feel the way you want, but nothing major. I think what matters the most is here the settings, the percentages that you want to track. If there are any other percentages that you want to see, you just check on the box and enable and add more lines. The lines on the Fibonacci only go from 0 to 100. But if you wanted to see the next Fibonacci level above 100, you can turn that on and say, I'm going to turn this on and track a 123%. 123, I click OK. And if I squeeze the chart even further, you can see that it's added another line at a 123% of price movement. Does that make sense? All right, so let's go ahead and go back here. Let me remove that 123. Okay, so in terms of analysis, I'm looking at this chart. I measured this high to low. The idea is here to look at the chart and see where different levels may have been hit. You can see that from this measurement, the price activity recently has been all over the place. So maybe not a great example to follow. However, you can see that when this futures contract started to rally, and we are a few days into the rally, you can see these two candlesticks, the wick on those two candles almost touched that 50% line. Now, we've said that 50% is not a Fibonacci number, but you can see that 50% acted as a resistance for the price to continue on that same direction. Of course, the price dropped a little bit after that, but you can see that it stalled right at the 23% retracement, and it bounced and went up. Right now, we are at a 76% retracement from the totality. This is something to also try to understand and consider. You know, we draw the line from the top to the bottom, and that measures a 100% price movement. And that's why you have those two lines, the 0 at the bottom and the 100. So as the price bounces and retraces, it's going to tell you how much percentage that price has retraced and has moved back. We're almost at the same level that we were back in February, almost hitting that 100% retracement. Not almost, we're at 70, 76, a little bit higher than 76%. You can see the candles building at the moment, but it's a significant retracement. Now, of course, what it'll do right here on this level, I'm not sure. So we're not here to actually make predictions, but we are right at the 76.4% retracement on Fibonacci, and the price activity is there. I'm not suggesting anything, but it's something to consider. Will it do anything? Will it act as a resistance to moving any further up? Something to consider. And you can change the symbol and go and look at other things. For example, if I change the symbol to a security, an equity, this is AT&T, you can see how the Fibonacci's are gone because the Fibonacci's that I drew don't apply to AT&T. But if I go back to the symbol that I was watching earlier, ESN25, and I change that symbol, you can see that it remembers the drawing tool that I drew, and it'll still continue displaying it so I can do some additional analysis. So the drawing tools are very specific to the chart on which they're drawn. So they don't transfer very easily to other chart analysis. And to tell you the truth, they won't transfer to other charts. So if I have this chart of the S&P E-mini and I have other charts on different time frames, I'm not going to see the Ichimoku on those other charts, only on the one that I drew it. But as I change the symbol on the chart and I'm looking at other securities and I come back to the one that I had already analyzed, it'll have all the drawing tools that I drew. I think that's something that makes your analysis a little bit more convenient. Okay, so that's the Fibonacci retracement. Let me go ahead and remove it. And let's go over here to the next one. The next one is the Fibonacci price extension lines. Very similar to the Fibonacci price retracements in the number of levels, but it requires a third anchor point to draw. Extension lines are trend-based, and they're calculated from a retracement point, used to monitor support and resistance levels as well as the breakout price activity from a specified retracement level. Let's go ahead and take a look at that on TradeStation and what the difference is from the regular retracement lines. This is, let's take a look. All right, so I'm going to bring this chart over because the extension price retracement allows you to measure a particular movement in the history of the chart and position that movement that you're measuring over into the future. And what I mean by that is that, let's say, for example, that when the markets were rallying a few weeks ago, there was a correction right here that we can measure and try to overimpose this correction over where the market is at the moment. Because maybe we think that, yeah, the market has rallied for some time consistently, and now maybe it's time for a small correction. But we want to take corrections that have happened before and overimpose that correction going forward so that we can have something to measure it with. It said that many times that market movements that happen in the past may repeat themselves in the future. Not exactly, but we're talking about the behavior of the S&P E-mini futures historically and how it could move going forward. So in a nutshell, what I'm trying to say is this. I'm going to go to the drawing, Fibonacci price extension lines. This is it. Okay. Notice it's a little bit different because I measure my retracement from this high to this low. It draws my levels. Notice that now the levels have been set by just clicking on the piece that I want to measure. It automatically sets the levels, and now I have to decide where I want to position that measurement. Let's say that I want to position that measurement right here at the very high of what's happening today. And there we go. Now it's drawn my extension Fibonacci retracements. This measurement that I took right here from this high to this low, I brought it up here, and this is right here indicated by the 0 to 100, the same distance. So the distance that I got from this high to this low is represented right here from 0 to 100. So maybe I can start measuring how the price retraces based on this historical correction. Now, maybe the price will not correct at all. Maybe the price will continue on a rally. But if I have indications that the price has stalled and it's going the opposite direction, I can use historical movements as a way of measuring current movements. So this would be a way of me telling if it reaches this level right here, it'll be exactly the same correction that happened in the past. Of course, this can be adjusted. It can be, you can look at other percentages as we talked about earlier. So maybe if you don't feel like a 100% correction would be possible, will you at least take a look at the Fibonacci levels, a 61% correction or a 38% correction? What will it be? But this is a great tool for you to take a measurement of historical rallies or corrections and then pushing them forward and see if they happen going forward, okay? Pretty cool. The next Fibonacci is the retracement calculator, which is a little bit more specific in terms what prices are available. Of course, the prices, you can enable them on the lines, but this is interesting, and it's used to examine price movements in trending markets. It assumes that the price of a security will rise and fall many times before continuing a major trend. So we're talking about the corrections. Price corrections often retrace prior trends by specific percentages. This is known as percent retracement, and they help identify trading opportunities and provide support levels for a market. So in a nutshell, what we're trying to say is that it's the same calculation expressed in a different format. I like the Fibonacci retracement calculation because it gives you values paired up with these retracements. And sometimes it helps you if you want to place some exit orders at these levels, whether you want to do a profit target or a stop loss based on Fibonacci retracement levels. That's an idea. That's a strategy that is out there and many traders use. But a lot of times you need the exact prices at which you want to place these exit trades. Or maybe you want to draw lines based on these percentages. So in order for you to use the calculator, all you need to do is come here to a chart. We come here to the drawing menu, and I'm going to go here to the price retracement calculator. And I think this requires 3 clicks. So let me do the same clicking here. 1, 2, and I'll do this one right here. 3. So this calculates what the values would be for each one of these lines. We have the 38.2 retracement, which is at 52.80. And if we look at the price here on this line, which is the 38.2 percentage, I'm not sure. Okay, this is, okay, there it is in parentheses. That would be, let me just make some sense out of this. So we went from price 1 to price 2. Okay, so what's happening here, it's the following. The calculated values here. So I went from price 1 to price 2. So that's the first measurement. And then it calculates what this third price represents based on that movement. So in other words, let's label these A, B, and C. So from point A to point B, you draw the first retracement, and then from point B to point C, that's your second retracement. This second retracement from, actually, this is not a retracement, this is a rally, but from point B to point C, that is or represents 196% of the first measurement. First measurement against the second measurement. That's what the Fibonacci is doing here. And that is a 196% retracement. So on that percentage move, then it calculates these values. So it's very different than what we would get if we just do the straight price retracement of the Fibonacci, because this is taking into account the prices that we click on. Okay, so from a downtrend to a rally, that was the 196%. And then we have all the values in between. In this example, 0 would be down here, and 196 would be up here. Let me just make sure that let me draw these levels right here. 33% retracement is 5260. Let me click OK to that. 5260, somewhere down here. 5260. 33%. Okay, 33% of this. So yes, 5328, it's a 50%. The 50% would be half of the very first measurement at 5328. Once you start going above this level, you start going above 100. So yes, this is 0 down here, but 100 is over here. 0, 100, and the third price that we clicked on is 196. Does that make sense? So the percentage calculations here, the numbers that you see in here, are between 0 and 100. So this level right here. Okay. After that, this is the retracement calculator. It just gives you a little bit more information about what they do. So the calculator considers price range from 1 to price 2 to be 100%. I guess I was getting a little bit ahead of myself, but here it is explained on the PowerPoint that yes, 1 to 2 is 100%, and then it calculates a difference, price 2 and price 3, and divides that value by the difference between price 2 and price 1, giving you the percentage retracement, along with other Fibonacci key levels. The key levels on the calculator, though, cannot be adjusted. Yeah, the calculator is hard-coded. It only allows you to select 3 different prices, as I just showed you, and then it does the calculations on the levels that are there in that floating box. The only Fibonacci drawing tools that can be adjusted in terms of labels that you want to add or remove are the other ones. But this one is just a straight calculator to give you prices from 0 to 100% retracement. Time extension lines is interesting because now we're not using prices. We're using vertical lines to identify zones based on the Fibonacci levels. So the chart is divided into segments, vertical lines, and they're spaced apart in increments that follow the Fibonacci sequence. Interesting concept, and you're going to see all these vertical lines spaced out following the Fibonacci sequence. Each line indicates a time when a major price movement is possible. That's an interesting part. Fibonacci levels are not only monitored vertically in terms of price, but they can also be monitored horizontally in terms of time. Let's go ahead and take a look. I'm going to come over here to my TradeStation. Let me remove this price extension line, drawing, and this is the Fibonacci time extension line. Now, the Fibonacci time extension only needs one click. I'm going to click on the bar that represented the lowest price on this particular security. It's right here on February. And then I'm going to extend my, it actually requires 2 clicks, but I'm going to extend my Fibonacci's over here to this new high. Now I can do it to that new high or another significant high, for example, right here. One thing that happens, once you start getting closer to the right-hand side, you see how these lines disappear. So if I were to put it right here on the very current bar, where are the other lines? They kind of just went away. The reason for that is because space to the right. There's only a specific amount of space to the right. And even though visually there's a lot of space here available, graphically, the space is limited to just 5 spaces. Of course, that's a number that you can modify. Let me remove this for a moment and add more spaces to the right. So I'm going to double click on the background of the chart. And right here on the general tab, you're going to find a box that says space to the right. Notice that it says 5 bars. So I only had 5 spaces for the future candlesticks, only 5. So the lines were falling off the grid because they were further ahead than just 5 bars. So if I want to see an extension of those lines into the future, then I need to add more bars to my chart. I'm going to add 50 bars to the right. Visually, you see that nothing happened. But if I go to drawing and I say, show me the time extension lines one more time. And I click on this low and then try to put it right here on the high here, then I see more lines. I may need to adjust and allow more, but you can see the 38%, the 61%, and the 100%. Interesting how the measurement is taken. For example, if I look at the 2 points that I selected, I clicked on this low back in, this is the low in April, and then I selected this high on the current bar, May 13th. That measurement is what determines 100% going forward into the future. So it starts at 0%. This is a 0% line. And then we have the 100% over here. So by the time the candlesticks or the price activity reaches this line that I'm clicking on, it has passed the exact same amount of time. So we're breaking up time into Fibonacci levels and see if it aligns with market movements. Of course, I did this into the future. So by the time this fills up, it's going to take a while, but you can do it also on historical movements. Let me go to remove this time extension and take a look at what the chart has been doing recently. For example, let's take a look at this drawdown that we saw in the past few weeks. I'm going to do the same time extension lines. I'm going to go from this high that I think we did it one time. I'm going to go right here to this low. Looking at what happened to the market here, I don't see specific alignments to market movements. Like, for example, at the 38% level, we were on this very big up green candlestick bar. But the one before was also an up candlestick. So there's not a major price movement. The one on that bar was major, but the price had already been rallying from this bottom. Maybe it is interesting that it is one of the biggest bars from the collection. That could be interesting. Over here at the 61%, we see a little bit of a correction on this rally, but it wasn't right on the beginning of the correction. The prior bar was when the correction started, but then at 61.8% Fibonacci level was confirmed. From that moment on, market seemed to rally again. So maybe, yeah, there's a few things that are happening here, and market behavior in any sense aligned with these Fibonacci levels. Again, a lot of traders think this is just voodoo science. If a lot of users are following these Fibonacci levels, they're deemed to have an impact on market behavior. So let me go ahead and remove this. Let's go ahead and take a look at the next Fibonacci tool. And it's just Fibonacci speed resistance arc. This is an interesting one because in addition to using time, and we're almost here at the very end of our presentation, but in addition to adding time, price Fibonacci, we see horizontal lines, right? Time Fibonacci, these are vertical lines. These are not either vertical or horizontal. These are circular. It actually includes both time and price because of the arc style that they represent, which is an interesting tool. And you're measuring not only the speed at which the prices move, but also the time. Let's go over here to my TradeStation and try to do that same measurement that we did earlier. Drawing Fibonacci speed resistance arcs. If we do from this high to this low, that would be the 100% movement. Take a look at this interesting behavior. Take a look at, we measured it. Of course, we have circles. We have that big drawdown from that very top. Once it reached the 38% retracement, you see the candlesticks coming back to that 38% retracement. See what's happening over here, still touching that 38% retracement. and then it come right down. On the 61%, didn't stop. It actually broke it and decided to go all the way down here. Now we see the market activity rallying up, but it's just interesting how this aligns pretty well with this correction that happened earlier. Of course, this is a way for you to keep track, not only on the levels up and down, but also time-wise as the market responds. Fibonacci resistance fan, also based on the Fibonacci calculations. What it does is just you draw a box on a particular area of the chart and it just draws a fan for you. I'll try to do it and see if I come up with something. So drawing speed resistance fan. If I do the same thing, yeah. Now this is an interesting behavior. Take a look at, we see reactions again on Fibonacci levels. On this particular one, we see the blue line, which is a 38% retracement. The yellow, it's 50%. And then you have the red one at 61%. So we see how the price activity kind of bounced at those levels. And it's just a different way of calculating this retracement. I think in the PowerPoint, no, we don't have, it's similar to the ARC one because it does combine the two concepts because you don't have just plain horizontal or plain vertical. It combines both. So you're actually measuring speed and resistance. And lastly, the cycles. Cycles are drawn. They stick to the Fibonacci sequence. Let me go back here to my TradeStation and go to drawing. Let's see. Cycles, I think, is the one that just takes one click. There we go. And it creates the Fibonacci cycles, vertical lines, very similar to the time extension. The only difference is that the time extension, you have to measure a starting point. And that measurement is used to project the lines going forward. This one is just a straight out sequence of Fibonacci numbers. And you can see the lines, they correspond to an actual Fibonacci number starting with 1. And if I were to squeeze this, it goes all the 144. But if I were to, let me squeeze this chart a little bit. Then we have the 233. Then we have the 233, 377, 610. These are all the Fibonacci cycles starting from that bar that we drew them on. But you can see how they represent all the different Fibonacci numbers for you. Now, here comes the question. Which one should you use? Because that's the question that everyone wants to know, right? All these Fibonacci tools are based on the same calculations. The different ways that they're represented allow you to analyze the markets with a different perspective. But always remember that the levels, the lines, all use the same Fibonacci mathematical calculation. So which one is better than the other? I would say they're all the same in terms of what they're trying to tell you, that the lines represent these levels that are important to look at and watch, whether it is because a correction will happen, it will bounce against resistance, bounce against support, or it'll be a breakout, because all of these scenarios can happen. Now, when to use fan over arcs or over just straight lines is up to preference and personal style. If you're a fan of Fibonacci, try to use a combination of different ones to see if they all align in terms of what they're trying to tell you. They should align because they're using the same mathematical calculation, right? But there's a lot of analysis that can be done with these. Now, I said at the very beginning that there is a ton of information online in terms of strategies that you can design around Fibonacci. But the first thing to do is understand why the lines are drawn and why they're drawn at the level that they are. And I think we pretty much covered that today. We talked about the mathematical formulas around Fibonacci levels, how each one of these drawing tools are used, and how you can pretty much see how the market sometimes, because I'm not going to say that always, but sometimes does align with a lot of these levels and what the market and how it's responding. All right, guys, this is the end of my class. I appreciate your time here with me. We have our events schedule lined up with different topics that please check out our events calendar to see what's coming up. I'd be looking forward to seeing you there. Okay. So thank you for joining me today. Have a wonderful afternoon, and I'll see everyone in my next webinar. Goodbye, everyone.